What's up, guys? Good afternoon. I hope you guys had a great day. I do apologize for being late tonight. I'm going to tell you all about it, read all about it. We got sound. I hope you guys had a great day. We had a wonderful day in chat today, a huge day today. We gave out two triple digit winners. Tesla, the S&P. The S&P ran without me, but members were hopefully able to collect on that position. Guys, this is a wonderful opportunity that we live in. Do me a favor. There's a lot of people that are not liking the stream. All I ask is a like, and if you have not subscribed, subscribe, because we put out daily valuable information on a daily basis from someone who has been doing this for almost 10 years now. Okay? Take the time now. Let's get it over with. Let's like and subscribe. Guys, let's get right into it. FOMC meeting. We're going to get into that. What is their whole... What are they trying to do? Right? We're going to talk about what exactly I mean by that. I have charts. We're going to show you some things that you're going to see that's going to really put into perspective that they're probably doing the same thing they just got done doing, which is overdoing. Right? Over easing and then over tightening. All right, this is going to be a really tricky question that I have for Jerome Powell and crew themselves. We're going to go over the FOMC minutes, a couple highlighted verses there. We're going to talk yields. This is an important live stream tonight. I need you guys front and center because it is important. Not only just the seasonality of August and September being usually weak, but the environment that we are in, that we find ourselves in. This environment allows you to have so much opportunity if you know what you're doing. So if you continue to like the stream, and if you are not subscribed, please subscribe, because you're not going to find this anywhere else for free. Everyone else that's out there, for the most part, is full of crap, and they just want your money, right? They just want you, they want to tell you whatever it needs, that whatever they can tell you, whatever it is that you need to hear, that you just give them the dollars. Okay. That's not what we're doing here, right? I want to go over these charts. I want to help you prepare. I want to help you manage your risk and hopefully at the end save you money. If you're not familiar with this chart, this is the US 10-year. Okay. This thing has been exploding, and I have said this for quite some time now. All right. If you're just tuning in, welcome. Hit that like button, subscribe. Thank you guys for joining us. I have said for 2 months now, it's only a matter of time. And this is not just because of seasonality. It is only a matter of time before the market starts pricing in a real recession. And I mean, the farther we continue this type of policy, right? The more time we continue with these talks of, possibly going to 6. They haven't talked about going to 6, right? They could feel completely different right now than they did back in July when these notes were taken, okay? Because again, these notes were taken prior to the Fed meeting, okay? These are the notes from that meeting, all right? So that's what we're going to get into. We're going to get into the FOMC minutes. We're going to get into these yields. We're going to see where is it that I think the opportunity lies, right? Where is it that we can place ourselves to put ourselves in the best position possible? We got a lot to go over. I'm going to try and run through it, okay? I have a lot of charts for you guys as we go through this stuff. All right, let's talk about the S&Ps, right? This is the 10th day out of 12 days that we were down. I told you guys last night, it was either on the live stream. It was on one of the live streams. It was either last night or today, where I said when I looked back and watched the live back over, it was clear as day, guys. It was clear as day. You don't need a chart to tell you this, first off, because they have a lot of charts with retail buying, institutional buying. Let's just go to the daily on the S&Ps, right? We're going to get into our trades as well. What are we looking at for tomorrow? All right, first, let me get into why I am late. I have to. Let's talk about the thumbnail. That's one. Literally, I spent way too much time, not on necessarily that thumbnail, but a thumbnail. Literally from 5 o'clock, 5:30 till 7:30, 7:45. I just was drawing blanks, right? I just didn't know what, and it came out good, right? In due time. I have another thing to tell you or, convey, right? If you are trying to do something and you are at the edge of quitting, I need you to not quit. I need you to find hope. I need you to dig deep, because as soon as you get to that part, you're going to make it. That is when you're about to break through. Okay? Keep the positive vibes. Keep on fighting. We can get through whatever it is that we're all going through. Okay? I need you to keep that head up high. We're going to get through it. This is why I'm also here to help you with, using the one of many tools, as I say, to get us where it is that we want to be, or hopefully accomplish and set ourselves up for later on in life. Right? We have a great opportunity right now. We need to take full advantage of it. If you do not know, we do trade live Monday through Friday right here on YouTube. IvyEliteTradingYouTube.com. We start about 7:30 in the morning, sometimes earlier, and we will go to the close and stay after if there's earnings and things of that nature. We discuss a lot of stuff, right? We'll go over earnings calls. We'll go over a lot of stuff. If you don't know, and if you're one of those that don't listen to earnings calls, you should, because it's going to give you a lot of insight on what these board members and CEOs and these owners of these companies that are literally in the field seeing what is going on. And you can get that picture through different segments of the markets, from semiconductors to the retail, right? Your Walmarts, your Costco's, your Amazons, McDonald's, right? Then you can go over to airlines, the travel, right? You can start putting the pieces together, just listening to a few from around the way, banking, all that good stuff. So it is important, especially if you want to build yourself your own long-term portfolio, right? If you want to invest and do all those things, you need to do your research. When I first started, you guys, I had someone that taught me, right, the trading aspect and a lot of stuff. That also, it still comes with time, right? It comes with time. But more importantly, when I started, I did not have to blow up an account, right? I didn't have to do that, because it's hard when you're just starting. Like, maybe it's not even trying to paint the picture of what it is that you're doing. When you sell a spread, should you be selling it, and are you to buy it back? Things like that. Not fully understanding what exactly is an option. Like, is this a coupon? Did I get to buy this? And like, where's the coupon? Blah, blah, blah. It can be a little confusing. Try not to think about it too much. Okay. We help you with things like this to say, hey, I have videos that I'm working on right now where you are going, once you get to that point where you're kind of understanding options, I'm going to have a video out that is going to help you so much. You're going to be able to be a professional. Okay, you're going to be able to say, I know if this price is not here by this time, I'm going to lose roughly about this much money, right? I'm going to make this much money when it gets here. I know how much I'm risking, because if it gets here, I'm going to lose this. It's important that you know those things, so you know how many contracts you're to buy. We want to help you grow your account. First off, we want to help you not lose money. That's our most important thing that we need to stress upon. You get into some volatility like this, especially if you're new, you may get chopped up, and it's only a matter of time. The math only works one way, right? You got to make that math work for you. You got to take the emotion out of it. You got to give it time, and you got to take it slow. Because I'm telling you, there is nothing stopping you from making $1 million, 100,000, 20 grand, 2 million, whatever number you have. It is feasible for you to be able to do it. You need to be realistic and realize that it's going to take time to compound that interest, right? You can do it, I promise. And if you're struggling at something that you're trying to accomplish and do things, and you're fighting and you're getting to the point that you're about to give up, please don't give up, because I'm telling you, that is when you're right there, and it's right around the corner. I promise. So keep the faith. If you guys have any questions, throw them in the chat. If you could, do me a solid. Like this stream. Subscribe if you haven't already subscribed. We really do a lot of things to try and help you guys here, right? A lot of people would want to charge you tens of thousands of dollars, if not $2,000, $3,000, $4,000, just to do a lot of the stuff that we do here. Again, it's greatly appreciated. It takes a lot of time to do this stream, to try and have a life, right? I am on here from 6:30 in the morning till 12 o'clock at night, guys. So it is greatly appreciated. If you guys want to keep these videos coming, let's hit that like button and subscribe. Let's do it. Let's talk Fed first. All right, we're going to talk FOMC minutes. All right, you guys got to realize that their sentiment may be different from when the sentiment was back then. All right, we are literally rearing ourselves into 2024. We are literally almost a year and a half, if not close to 2 years, from when this rate hike started. Right, so I need you guys to realize one thing. I'm going to show you guys a chart here. I want you guys to see this, and I do apologize because I took it on my phone, and you're going to have these little lines here. So what do we have here? On the left, we have Paul Volcker. And yes, let's do that SPY thing real quick. There's charts that say institutional buying, retail buying. All I need you guys to do is look at this volume. What do you think's happening right now? Don't even look at the candles. What is going on? Okay? What's going on? If I draw a box, that was your last highest green candle. What do you see in this box? Nothing but selling, ending the day lower than where it opened. Right? Technically, yes. It is ending the day lower than where it opened. Okay. Sorry, I got bit by a mosquito. So I had that. Oh, so the stream too. I seen this and I'm like, man, they're selling. And as we can start to see, the slowing may give up just a little bit, and we should get a technical bounce down here at 438. We're going to get into all that. I've given you guys all the targets and everything. I might start doing a video so I have all the charts ready. Bada bing, bada boom, and everything is right there. Here's this, here's that, here's this. All right, we'll see. If you guys could comment, give us a comment, give us a ticker, ask me any type of questions, because I want you guys to know something, that I really care that you guys succeed. Right? This is the whole point of me doing this. Right? My other goal is to be able to bring people on. There's a lot of people that I'd like to be able to bring on here. And it's going to be hard for me to do that, if we get, X amount of views and nobody's liking and stuff like that. So it's greatly appreciated. I hate to dwell on that, but it takes a lot of work. And I just want you to know it is greatly appreciated. Again, we don't ask a dime for this. It's free 99. What do we have here? We have Paul Volcker in blue to the left, right? Right here. And we have Jerome Powell in the red, right? Look at the steepening of this rate hike cycle, guys. Okay? Look at that. Over a 16-month period, it has pretty much went 20%, right? From, that is you could accumulate that to rate of change, right? That's the rate of change, if I'm reading this correctly. All right, so there you go, 5%, just over 5% right there, right? From where we were, that's a pretty big rate of change, right? So in the blue, you have Paul Volcker. You got a little steep there. They dropped him, okay? And this is Paul Volcker. Pretty steady compared to Powell. I mean, we've just bang, right? Here's your return. Here's the 12-month return following past 6 hiking cycles. 1, 2, 3, 4, 5, and 6. All right, so 12 months following a rate hike cycle. The average return was 19.7%. Good. This is what I'm getting at, right? So this is to be expected. So if you hear people that are surprised that the Atlanta Fed just raised the GDP, not necessarily their target, but their estimates from what they have today, would be at 5.8, nearly 6% GDP. Here at Ivy League Trading, we are not surprised by that because we do our research. Right? We do our research here. All right? We know the system for the most part. I do. And I try and help teach it. Right? This is what is going to separate us from everyone. This is going to help separate you from everyone else. Right? You can go to the water cooler, sound smart. Did you know this? Did you know that? That's the whole point of this. I want to help enlighten you guys and actually give you guys valuable information day after day, night after night. That is my goal. My other goal was to bring some people on here that I'd like to interview. So it would really help, to be able to do that if you guys hit the like. So this is very important. When do they say, let's just relax, right? Higher for longer. Well, when is the longer, right? Because we're just doing higher and higher. This is the sentiment that was out of the Fed meeting or the FOMC minutes, right? If you don't know, Atlanta Fed raised their GDP target to roughly 5.8%. Now, will we get there? Probably not, but it's just an equation that they use from the stuff that they had, the information that they have from today. Let me take a sip. All right. This is going to get good, guys. And why are we not surprised with this type of rate hike, Paul Volcker's rate hikes, that we're not surprised that we get a 19.7% after what, 12 months? This is where it gets good. This is where it gets good, guys. I'm going to try and speed it up so we're not here all night. All right. So let's take that down. Let's go to the next slide. All right. If you don't know what this is, this chart, you technically want to look at it backwards. You want to read from the right to the left. But I'm going to explain to you why. What we have here is GDP growth, right, after rate hike cycles. What we have here is a 2-year, we have 2 years prior to the rate hike cycle. We have GDP during the rate hike cycle, and then GDP 2 years afterwards. This really makes sense. And then I'm going to tie it in with unemployment. That one, you're going to give me 1 second because we're going to go on Fred.com. November 1967 to June 1969. Well, they had to what? There was probably easing going on for them to start raising in 1967, right? So 4.8% was GDP 2 years prior to them starting in 1967. You get to 1968, that's during the rate hike cycle, the average is 5.1% GDP. Really good, right? They raised for 2 years, and during that cycle, you averaged about 5.1%. Why would that be? This is your lag effect right here, right in front of you. Because you are having quantitative easing and loosened financial conditions making their way through the system, right? This is showing you the lag effect. That easing is the easing of financial conditions takes time, right? It doesn't just come to a halt. 2 years after that rate hike. And this is going to get even better, 1.8%, right? Things are like not looking good. So what do? What do? We go right back to 1970, or we go right back to easing, right? So we're cutting rates, all that fun stuff. All right, let's go to 1972. Guess what? We cut rates, inflation. There was this whole ordeal back in the 60s and 70s. You guys know that. So they cut rates, right? They loosen ease financial conditions, right? 2 years prior, 4.2. During rate hike cycle, 6.5, because they've eased and things start to pick up. And it takes a little while for it to pick up, and it takes a little while for it to slow down. 2 years after the rate hike cycle, minus 0.2. All right, so if we go to June 1999, right? You had 1994 to 1995, a little bit of rate hike cycles. It wasn't but 1 year, it seems like. Okay. 4%, 4.5% during the rate hike cycle, and then 2 years after, which was 3.6. It obviously got a little worse. Some things happened. June 1999, again, you had easing, obviously, for the most part. You had expansion from 1995 up until 1999 when they said, we feel as though we've expanded too much. Let's start pulling back the reins a little bit. Fine. So they start the rate hike cycle. There was an average of 5.3. That went to 6.1 during that 1 year of rate hike cycles, or 2 years, whether it's from 1999 and then 2000, whatever. 6.1% during. That's the average now. 2 years after that rate hike cycle, 2.1. Right? So then what do? They're at 2.1 GDP. We're going down. Things aren't good. People are losing their job. We got to cut rates. We got to ease financial conditions. Bang. We start to get into it. 2004 to 2006. Look, we're picking GDP back up because we eased financial conditions. The market, the economy is picking back up. During the rate hike cycle, 3.7. And then we go to 1.8. That easing has stalled out. Feeling the interest rate hikes. GDP slows down. Growth, expansion slows. This is your time effect, right? 2 years prior, during, and 2 years after. What I'm asking you guys, what do you think the Fed is struggling with right now? Because like I said last night, we have people on the internet making a ton of videos for whatever reason, pretty much just losing hope, giving up, right? Saying that they can barely make it. Inflation's eating them alive, right? Inflation's eating them alive. It's sad. It really is. And it's not to their own fault. They've made a decent living wage, right? They don't ask for much. They get a vehicle that they can rely upon, that they have a warranty on. They get a little bit of food each week, and guess what? They're screwed. They can't even have the basic necessities of life, right? You can say you get a used car, this and that. I'm gonna tell you right now, when you get a used car and things like that, you might as well just get a new one, because you're not gonna have to worry about replacing everything. You don't have to worry about it breaking down. You have it under warranty, so you might as well just pay that payment every month and have just about a brand new vehicle. It doesn't have to be brand new. And just because you buy a brand new vehicle doesn't mean you have to spend loads of money. It's going to be a little expensive, but you're still going to have that, somewhat value left over when you're done. You're not going to have to worry about the car blowing up and being stranded and not being able to fix it, and now you're screwed because you have a warranty. You're covered. You're paying a little bit of a premium to be able to have insurance that you're not going to be left stranded on the side of the road. But anyway, let me fall back from that. So people are making videos and things of that nature. It's tough. It really is. And we all know the individual who said, inflation is a disease that it's hard to get rid of, and that you do not want to go that route. If you guys could comment down below if you guys have any tickers, you guys have any questions, be greatly appreciated. I'm going to show you guys something. So we just went through the GDP chart. We went through the Atlanta Fed raising the GDP estimates to 5.8%, and a lot of people are surprised, and we're getting into the FOMC minutes, right? All right, so boom, boom, boom. All right, so we got it. We're good to go. All right, what happened here? Oh no. Can you guys see that? Hold up. All right, so it's not too big, is it? All right, so what is the Fed going to do, guys? Do they say, do we let people struggle, let inflation be where it is, or at least leave the rates where they are and see what they do? Because we're getting ready to come into 2024, and the second half, the third quarter, is really when we should start seeing things slow down. We're already 0.7% and up 3.17% year over year. However, after adjusting for inflation, retail sales were up 0.6% month over month and down 0.12% year over year. Doesn't surprise us, right? Does not surprise us at all. So what I'm going to show you guys here with that 2-year lag, 2 years before, during, and the 2 year afterwards, right? How we get that slowdown in GDP. All right, so let's do it, right? Unemployment, there's a literal, this stuff is so tied, it's not even funny, guys. It's not even funny. So percentage, bang, let's do it. All right. I wanted to make it bigger for you guys, but I think you guys can see. Let me make sure you guys can see it and it's not discombobulated, that you guys can see the 2022. Let's see here, 2022 or 2023. What is that? July of 2023. So you guys can see it. Good, great, grand, wonderful. I'm going to start from recent, okay? And we're going to do the math from that GDP chart to unemployment, right? 2 years prior, during, 2 years afterwards. Watch this. And why does the Atlanta Fed raise the GDP? Well, they know. This will probably be the last raise of GDP, because I'm going to tell you right now, we're going to start seeing that slowdown. I assure you, I'm feeling it. I feel like we're going to really start seeing some things happen coming into this Christmas season, going into the winter. I for some reason, I feel like I may be wrong. My thoughts was second quarter. So if we do the math, yes, this was COVID, right? 2020, right? 2020. So in red, we have the unemployment rate. In blue, we have whatchamacallit. Unemployment rate is in red, and Fed funds rate is in blue. Fed funds rate is blue. Unemployment rate is red. So if we go to right here was peak rates. January of 2019 was literally the last rate hike. February 2019. What happens? Right? They cut, and it just happened this way. February 2020, bang, you get that real big hike. Let's just scratch COVID, right? Let's go to 08. So the Fed raises from 2004 all the way up to August of 2006, right? August of 2006, and what do we see, right? Bang. It's really right here is where it starts. Right there. It's like July of 2007, right? So you are literally 1 month away. You are 11 months away from unemployment ripping, okay? 1 year. I can keep going. Just let me keep going, right? Fed funds rate right here, guys. June of 2000. And I'm telling you this because this is serious. This is your life. You need to know these things. It's important. If you don't know this stuff and can somewhat gauge where things can get rough and you can start looking in case something happens, learn another profession to help you out. We trade live right here. Right? June of 2000. Bang. May of 2001. Boom. Right? May was that last bit of hope. Right there, May of 2001. Another 11 months. So we're going to say a year. A year. Let's go back to 1992. Or no, 1994. This is weird. Hold on, because unemployment just continued. Where was it? Right here in the 80s, right? Here we go. Fed funds rate peaks. The last rate hike, March of 1989. Bang. June of 1990. March. June. That was a little bit quick. This was the downtick, so really it was July. It was July, right? It was July because June was the low. You got another low print in unemployment like it's coming down. And that very next reading, boom, July. Uptick. That's when unemployment started. So at least 12 months. What I'm getting at is 12 months. 12, let's just shoot it out. Let's just give it a little bit of room because you can have the government try to deploy capital like they've been doing, stimulus and stuff like that. It has, and you can go back to the 60s, guys. Literally 1 year after the last rate hike is when that unemployment rate exploded, right? And that makes sense because we know in between the rate hike cycles, the average was, positive. So during the rate hikes, obviously, we have been gaining GDP because we're still making up for the quantitative easing that we've had for quite a few years, right? So it's just important that you guys know these things because it's literally happened not once, not twice, not 3 times, not 4 times, but 5 times historically when you have raised interest rates to a decent level. That very last rate hike, you can almost count the down to the hours where that unemployment rate starts to tick up. So when we go through the FOMC minutes, I do not want to hear them talk about no recession. I promise you, if they continue like this, there will be a recession. I assure you. Let's talk FOMC minutes. I think I literally just clicked out of it, guys. I didn't. Okay, good. All right. They think, in assessing the economic outlook, participants noted real GDP growth had continued to exhibit resilience in the first half of the year and that the economy had been showing considerable momentum. Well, of course. You're making up for the easing that we've done and the amount of liquidity that was given out, the amount of money, right? So let's look here. There was a lot of talks about banks starting to tighten right here, Sluice. Banks reported expected to continue tightening lending standards for credit card loans and housing, right? It's not even just credit cards. If you read this, it's in here. Banks are tightening now. July. I'm sorry, because this is past data. It's starting. I'm telling you, things started to contract and they weren't even tightening like they were. They're saying it in these notes. If you guys go through and read it, right? That they're starting with the big hitters, the big money, right? Once the big money is not, they're not giving them their loans, whether they have good credit or not, things are going to start coming downhill real quick. I don't know why they keep saying that we're not going to have some type of recession. You already have it in most parts, because in real estate, if you are a commercial realtor, the cap rates are more than or less than real rates, right? No, that doesn't work like that. Obviously, they make a deal between it, but it's going to hit. I'm telling you, there's only so many buyers. There's only so many people with credit that are going to be able to get homes and stuff like that before we start really seeing these home prices come down. And again, they just stated here in July that they've just started to tighten lending standards, the banks themselves, whether you have good credit or not, right? Because they don't want it on their balance sheet for what's about to take place. And then you got to add on the fact that they got to have higher liquidity for margin standards, right? They've raised margin requirements as well. That's going to take an effect. I think it's going to take 2-3 years. It's like 2025 is when it starts. And then they should be fully into it by 2008 or 2028, right? So 2005, they're starting it, 6, 7, 8, 3 years. Then they'll be fully in raised margin requirements. What does that mean, right? The bank has to keep more cash if they meet a certain amount of over 100 billion, I think it is, or 100 million. It's probably billion. I can't remember. Am I crazy? Because 100 million seems low, right? It does. So it's 100 billion in assets, I'm pretty sure. So you've seen that the day of the the day that they raised margin requirements, you've seen what? You've seen that Treasury bill auction where it went up to 7%. Why? Because the banks are trying to sell it to get down below that so they don't have to meet these requirements. They're going to do their best to not meet these requirements because it's going to cost them money. It's going to cost you guys money. It's going to cost business owners money, right? They're not going to be able to they're not going to be able to give it to them. It's going to cost them more money. It's like not that they're going to be able to not give it to them, but it's like they got to juggle, you know? It's like they may not be able to give it to them, right? It's just they've got to keep X amount of liquidity on hand, and I think it's really going to hurt people because the people that are paying the payment that really need it are going to have to pay more. They're going to have to pay more. All right? So I didn't have anything written down for that, so I was kind of just going with it, but that is also in effect. What else do we have here? Respondents of the Open Market Committee survey of primary dealers and survey of market participants in July continue to place significant probability of a recession occurring by end of 2024. Okay. However, the timing of a recession expected by survey respondents was again pushed later, and the probability of avoiding a recession through 2024 grew noticeably. No, it ain't. You ain't not having a recession, I assure you. Especially if we continue with this sentiment that it feels like that we're having, guys. If you could, give us a like, subscribe. If you haven't already done so, we're getting ready to go over charts, trades of the day, and we're going to go help you how to grow your account. I do this every night. One more thing. What do we have here? There was a strong anticipation evident in both market-based measures and responses to the desk surveys that the committee would raise the target range to 25 basis points at the July FOMC meeting. Most survey respondents had a modal expectation that a July rate hike would be the last of this tightening cycle, although most respondents also perceived that additional monetary policy tightening after the July FOMC meeting was possible. Okay, it's possible. It's possible. Is it though? Is it possible? Is it? Because again, this is going back to the question, guys. There's a lot on here. You guys should go through and read it. Now, they may not feel this way. They could wake up one day and just feel completely different, right? They could feel completely different, guys. So do we keep people working and not being able, still feeling, depressed, just feeling defeated, that they're not making ends meet? Now they're starting to rely on credit cards, this, that, the third. Or do we just really mess them up and get a bunch of people fired? Which is it? Right? Are they barely being able to afford this inflation and will keep rates higher for longer? Or are we just going to continue to raise it until we really see something happen? I'm going to be honest with you. As bad as it is, I wish we can all get through it together. I would wish that they would send this son of a you-know-what into the dumps. This would bring down home prices. This would mean that people that could be able to get a home or something of that nature, yes, a home, right, could get it at a high rate and then refinance, right? Refinance and be able to afford a home. Bring these prices down. Stop just leaving them where they're at, because people can't afford where they're at, right? Some people can, a lot of people can, but a lot of people can't, because who's to say they don't have another half, right? So there's some serious stuff going on, but yet here we are, from what I just heard, that they're going to do another $300 check to everyone that has for each kid. Like, they're just throwing gas on the fire. So we're also going to start getting these tuition payments that have to get repaid. You have a lot of stuff that's going to be coming up in the next couple months that's going to really slow spending. What does that mean for the holidays? What do those numbers come out, right? Let's start thinking about that. Do we think that there could be a big slowdown when it comes to Christmas and then those Q4 earnings that come out in Q1, that it wasn't too good? There was a real big contraction in spending, right? You want to look for that, because that's when the market's really going to price it in. Again, I've said it for 2 months. I don't mean to go on this for too long. I've said it for 2 months. If we continue at this rate, and these rates continue to go as high as they are, the market is going to price in a recession. I assure you. They're not even going to say, listen to the Fed. They're going to say, you keep doing what you're doing, and you're not going to give it the lag effect and time that it does need, because we have the data for it. The Fed has the data for it. They should know. They should know that this is the fastest you have went since a long time, a really long time, right? A long time. You have just went from 0.25 to damn near 5.5% in a year and a half, right? In a year and a half. Has it been a year and a quarter? So that's what we have. We also have the 10-year, right? We have the 10-year ripping and roaring, guys. This thing's about to ready to break out of this pennant already. What is that going to do? That is going to put a heavy burden on tech stocks in particular, right? Semiconductors, mid-cap technology, large-cap technology, your Snowflakes, your Roblox, your semiconductors, right? So we're going to look to position ourselves there. Banks are starting to slow on lending. You already have Fitch talking about downgrading them, right? So where is it that we want to be in the markets? Obviously, we want to be short the banks. We want to look to be short in technology, right? So that's what we did today. Triple-digit gains on Tesla today, right? Over 100%. Over 300% on SPY puts. I told you guys yesterday my target. If you guys join us, we do trade live right here Monday through Friday, 7:30 to 4. I drew the box. I drew the range that I think where we're put ourselves in. We get down to this 438 level, I think we have a bounce. So I want to show you guys. I want to also get into something with the S&Ps, guys. So I want you guys to start thinking about multiples, and I have a chart. I did not send it over. So other than the fact that I spent way too long on a thumbnail, the fact that when I got into my studio, everything was messed up. There wasn't a camera. There was no thing at the bottom. It was just, I don't know what happened. I had to fix that. It was just terrible. I had to. It's not that it was just terrible, but it was just, I was like, I'm not going to be on time. And then my cats, I had to feed them. And Maul, my guy, how you doing tonight? It already made me high and it broke out. I know, it did, exactly. It's been ripping, man. Ripping. It's been ripping. And you also got to think what's going on in Europe, what's going on in Japan, what's going on in Australia, right? What's going on in Germany. They're all tightening too. So when you get to this import export thing, this stuff is going to have its trickle effect. It's going to start with real estate. It's going to start with used cars, new cars. People aren't going to be able to get vehicles because they either don't qualify or it costs too much and it's out of their range. Or the bank just doesn't want to give it to them because they don't trust them. Or that they just don't want to do it. They're not making any money on it. They don't want to make 1%, 2%, 3%. That's not going to pay the light bill. And who's to say you're going to pay it back? So there's a lot of stuff. And I'm telling you guys, I feel like it's coming. And it's not just a seasonality weakness of the SPY and it's just not the weakness of the month of August and September. Guys, I think the Fed is going to overshoot. And I think we're going to have more of a hard landing than they think. I really do. Because I would say you should much rather, as bad as it sounds, like my thing is they should do it, but from their standpoint, from politicians' standpoints, from politicians getting in their ears for elections and stuff like that, right? I think they should give us, we need to bring it down. Things have just been, since 2008, you got to remember, since 2008, we have just, boom, exploded. We need to pull it back in a little bit. Got to pull it back in, right? That way we can get on for the next 10, 15 years of expansion and then do it all over again, right? Pull back the reins. We know what to do. We've been through it, right? We're not just saving money. We're putting money to work, right? We're putting our money where something that cash flows, not just the bank. Right? The bank ain't going to do nothing for you except give you a loan. That's fine. You want to put your money in the bank and get a loan? That's fine. I'd hope you would just use that loan for the right reasons. Right? Don't use the loan to get something that eventually will just go to zero. Right? You want to increase your net worth? That's why we're all here. We're here to learn. So, let's get into it. Trades of the day. S&Ps, right? I was not able to get into it. So, this stream is going to be moved so I can start trading on my computer. Right? When they are tightening up, we got to see who wins, either buyers or sellers, and then we have to bet with the winners. Absolutely. I agree with that. We absolutely do. And like I said, it's been pretty clear. And what's funny, I didn't see this until I watched the stream back with the amount of buying that's going on. You don't even need a chart to see, who's in control right now. You don't need to see the little charts that say institutional selling and retail's buying. It's a load of crap, right? There's always somebody buying. Who's to say that they're retail and not? Look at that. Look at that selling, guys. It's starting to slow up a bit because we're coming into this technical bounce support area, right? It's going to be right here around 437.50 to 438, right? You just rejected the 50-day. So you've had lead indicators. You could have just followed the cues back down to this 50-day. So yesterday we gave you guys a couple different trade ideas. Last night I gave you some. I told you guys we break this 50-day. I was looking to get short on the bounce back to the 50-day. Well, I traded Tesla today, and I was not able to get into. I could have still taken it, but these contracts were 20 cents. When I went to get into them, they were already 35 cents. They were 20 to 40 is 100%. We'll put it to you that way. So I was like, I just didn't feel comfortable paying up, and I just said, I'll let it go. That's what I do. So this is how we continue to make the math work for us. If you miss a move, guys, you have to let it go. If a move is going to be strong in a direction, you will get a second chance at the entry. What do I mean by that? Stocks pull back, right? Whether they're going down or they're going up. They will pull back, and they will give you that opportunity for a re-entry. What else will come with that? You have allowed more time if you're playing options, right? It pulls back. You may be able to get those options not necessarily cheaper than where you could have gotten them on the first entry, but you're going to be buying them at the right places, and your risk to reward is not skewed. Because if I would have taken this trade on the S&Ps and it reversed, I would have had to give it a ways, right? I'd have to give it, because just because it pulls back doesn't mean the trade I'm wrong. Just because my position and my P&L is red doesn't mean I'm wrong. And I think a lot of people do that. I have found myself doing it. I'm not perfect either. I've done it, right? People trade their P&Ls, and this is what ruins them. This is why they're not able to get ahead. because they either are too eager to take profits, right? Which is not a bad thing, but when it's red, they're not eager to like sell it and admit when they're wrong or give the stock time to do what it needs to do. Whatever. It's just pressing the buttons, pressing the buy and sell button at the right times. That's all it is, right? So today, I said in chat, right here, this dotted line right there. I'm going to make it bigger for you guys. In chat, that dotted line, when I scrolled back, it said this previous pivot high, I want to get short, right? I was doing a little bit of work and I said, yup, this is it. I gave the stock a little bit of time. Like not a little bit of time, but I'm looking back and I'm like, yeah, we just went right back to this pivot high right here. Where's she at? Right there. Right? It was like right here. Right here. This base. Right here. We were right underneath of this. Right? We were right. Oh my gosh. Come on. Work with me, baby. Come on. Right here. All right? We were right under this base right here. And it was this previous pivot. This is where we were and we were not breaking it, right? So if you can't see this, right? So what you have here is a rally and a pullback, support, right? It breaks it, comes back up, support, breaks it. What's it do? Resistance. So I knew 442.65 area was an area of support and resistance that we were not breaking back through. So I said, short, I want to be short 438s for tomorrow, not today, right? That's still a little bit of a movement with even that much time. I usually won't. Usually I'll give it till Friday or something. But I was feeling frisky because I had such a nice trade on Tesla today that I earned the right to take the risk, right? So literally right here is where we called it out. And I said I was looking to grab puts on the S&Ps. And my target was down in this area. I was wanting to look for that 438 final take profit. I hope school was good. I hope school was good, Animal. But anyway, sorry about that. I'm going to say what's up to my guy. So right here, guys, right there was the entry that I did not take because I was too slow. Look, by the time this thing really did what it did, it was a red candle, right? I just got my clarification that, hey, it ain't happening. What did we do, guys? Right? And there's a lot of reasons why I wanted to go after this thing. Right? What do you have here? You have support. You have the previous, the morning lows sitting right there. What else do you have? You had prior day's close. Oh my gosh. Right there. Prior day's close. All these lining up. What else do you have? You have VWAP. That pink line right there. Shit. I'm sorry, guys. I'm going to erase all these. That pink line right here, that's VWAP. You could not get up and close above it and make a run. So what's really important is a few things, and I explained this in the Tesla trade, guys. I could play it back for you guys if you guys would like. I literally called out the pattern that I wanted to see verbatim, and members will say it. Members will they will tell you in chat if I'm lying. All right? They will tell you. Matter of fact, I could play it for us. We could go find it. So as soon as I got the confirmation that, hey, this is it, I need to get in these now. I mentioned it in chat that I wanted to grab puts here at this 442.96. It had already broke down and went red. And then we got this extension candle as well. As I'm trying to get my orders up through my phone because I haven't been doing it on here because I'm going to be moving. I'm going to have all my other monitors and computer and everything ready to go. So I will be able to get in and out of positions, with a lot more ease, right? And be more comfortable trading online with, being able to have my hotkeys and everything set and ready to go, right? So I missed that entry. I looked at them for a little bit and I'm like, I know these are going to go further. But again, right? What does that do to me if I was wrong or just for some reason we did find a bounce here at 442.25 and went back up? I could have got a re-entry. It didn't do that. 2, so if I buy the stock here, right, in this area, and they've already went just about 100%, they went from 20-some cents to like 35, 38 cents or so, that's a decent profit. But I would have had to now given it, right? I'd have had to given it from like, we'll just say here to like really to closing above these new highs, right? Instead of this, right? Instead of that, right? Instead of that. So there's the difference in the risk to reward. This is why if I miss something, I let it go, right? Look at that. That's a picture of risk right there, guys. This is why it's important to work on your entries, and when you get that clarification that you want to get into it, it's really important, guys, because having FOMO is only going to bite you in the butt. Like it only has to bite you in the butt once for you to take back every good that you've done, is what I'm getting at, right? That's not what I'm trying to teach here. I'm trying to help teach you guys that if you miss a run, it's okay. Catch the pullbacks. If it's really strong, it'll give you another entry. It will, I promise. Look at that. That would have been my risk compared to if I would have FOMO'd into it. And I still could have been wrong, right? This is what I'm trying to convey, guys. This was the best risk to reward. This was the trade I should have taken, right? Which I tried, didn't have enough time versus this. Maybe if I got a pullback, right, what would have happened? We would have cut it maybe in half. It's a little bit bigger now, but it's not as bad, right? I've gotten a confirmation on the pullback. It's not able to, continue higher volume. What else? So like I said, guys, the VWAP, volume, prior day's close. I told you guys on the live stream last night that I was going to be looking for a bounce to VWAP. You put in that triple. Look at that beautiful triple top, guys. If you don't know, this oval right here is the 50-day moving average. This thick red line right there is the 50-day moving average. Guys, these things went 300% today. You could have still have gotten them. I gave plenty of word. All right, I gave plenty of notice that, hey, this dotted line is there for a reason, right? During the day, I also told members, do not waste your time trying to trade something that doesn't have some type of momentum, right? I said, before the FOMC minutes come out, I can surely tell you with an 80% conviction that we are going to pull right back to where we opened or where we closed yesterday and where we opened today. You're going to get right back into this area. And what happened? What did it do? It pulled right back to it. What time did it come out? 12, 1, 2, right? Why does it seem like it didn't pull back? Maybe it didn't. Maybe it's me, right? What time did they come out? 2 o'clock, 12, 13, 14, right? 14. So they did. Right before the FOMC minutes came out, they did, right? Right there. That's the FOMC minutes, right? You had a nice trade prior to it. They were selling into the meeting, and I said that. I said, guys, they're selling into the meeting. We know where we're going. We're going to 438. Like, they're not making it, they're not trying to hide the fact that that's what we're going to do. Where did we open, right? We opened right here. So you opened at 442.46. It went back to 442.61, 20 cents away, right? 20 cents away. I said, watch this thing get back to where we opened or where we closed in that area before these minutes come out, right? You can use that for a trade if you want. So the S&Ps, huge trade. You could still have this thing, right? You could have just sat on this thing. This was an easy trade. The other trade of the day. Now, I'm going to go over a lot of stocks. I'm going to help you guys. If this 10-year yield continues to go higher and higher, this is what I want to get into, right? I want to help you guys get to the right places. Like, where do we need to be if things are going to continue to go this way? All right? I wanted to have such a better live stream than this, but sometimes it just... I did not expect all this stuff to happen today with, the things messing up on me. Gave you GDP. Look at this, guys. I want you to see this chart here. Look at this. This is the seasonality. 2023 tracking composite closely. S&P, Dow, pre-1927, the last 124 years. Right? Look at this. Look at this trend, right? This red is where we're at, right? we're coming into what? End of July, we're coming into August right there. So we'll see what happens, right? We're already starting to dip. Let's see what happens, guys. You know, it's looking really familiar. We'll see if this happens. They do this a lot. You can actually, you know, look, the black line, you came up, pulled back. The red one, you came up, pulled back, rally. You know, you can kind of relate it. You know, this second, whatchamacallit there, it's a lower high, but I don't know. It's all on how you want to see it. I guess you could look at anything and kind of make it seem like anything else. But so that was the S&P trade, right? Let's talk the Tesla trade real quick. There's a lot of important stuff here with these trades. And then I'm going to go into where is it that we want to get into. This was also the explanation of, you know, why I didn't get my second entry on Tesla, right? We're going to talk about that, right? I had to go use the restroom. I got away from my desk and it did what we said. So members will attest to this. If you think I'm lying, we can play it back. This was our entry. We literally damn near top ticked this thing on the short side. I said today, I said it yesterday. I said, if the markets want to go down to 438, what am I going to want to be short? I'm going to want to be short the weak names. That's Tesla, right? That is whatever else is weak. More so technology. More so maybe semiconductors. Semiconductors held up a little bit. But I'm telling you right now, if this 10-year yield, these yields continue to rise, watch out, right? It's going to give problems for the markets. And I have a really nice information thing here I want to show you guys. So in this trade, what I got in even before, or I can't remember if it was before or after it. I'd have to pull the video up and show you guys. We literally got in these things perfect. This is why timing is, or, you know, at least working on your entries is important, right? As soon as I got in this trade, guys, I was up 6%. As soon as I got in this thing ran up. So what I do is, as a stock is running up to what I think is going to be resistance or my entry point, right? If I want to be short or I'm buying puts, see, I like to buy puts because members buy puts, right? If it comes down to it and I got to do my thing, I will short. I'll also probably just have some puts on the side to see how members are doing. I short into strength, right? Why do I do that? Because I know as that thing's going up, I'm able to get my price a lot better because the price of the puts are coming down. Should be. If it's ripping up like crazy, that puts actually will go up. I think I took S&P trade today because I think I had I'm going to have to look. I think I took 2 trades today, guys. Other than that missed last S&P one. I have to look. So in the morning though, right? In the morning before the bell rang, I told members, guys, I am looking for a rip right off the bell. Let's go rip and run right to that 50-day. That's exactly what we did, right? If I know that, if I'm saying the SPY is going to run to the 50-day, I should expect Tesla to just about do the same, come off the bell, running and gunning. You have a huge gap down, right? There's a huge gap down. This thing has just been falling like it did a couple months ago. People are going to be taking profits off this big gap. This was the final, it's not the final flush, but it was just, you know, it really, you know, if you didn't take profits and you were short this prior, you know, shame on you, right? So we expected the SPY, the Qs, to give us, you know, that as soon as that bell rang, the run up to the 50-day. Same for Tesla. It obviously did the same thing, right? So I'm cool, calm, and collective. There was a really awesome lesson to be had right here in this range. This is also what gave me conviction. Now, I would have to play this video back for you. We could go back, maybe I'll find it and edit it, because there's a really important lesson here. I don't think I said it out loud, but I was talking about the lesson and what exactly was going on right here, right? What was going on there? And it started here, right? Well, we did not have an increase in selling. You know, it was there, pretty meaningful. You can't see this kind of stuff through the volume. You can't see this through the candles. but you can see it in real time. I literally drew a pennant that I said, I would not be surprised if we put in a pennant, right? But more importantly, I told members, hey, and none of this was here, not this drawdown, not this. Off of this and this, I drew it out, right? I drew it out. This is just, guys, I have time in the markets, right? Yeah, I don't expect anyone to be able to do this without at least a few years in the markets. I literally said to members before I got in this trade, as we're coming up here, we're probably going to put in a double top. Why did I say we're going to put in a double top? What did we do? We put in a double top. You ran up, pulled it back, tried again, bang, right? One top, two top, three top, no more, okay? 232 to 233, you really had an insight if you were just watching time and sales and you were watching the candles. And if you could feel what was going on there, you would know, hey, I think this thing's done. It stopped. The buying, because look at the size of these candles, right? You see the size of those candles, bang, 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 bang. And then look how small this is. This one even gets it's a little bit bigger because now you have sellers. You have sellers that are involved. The buying literally stopped, right? It literally just stopped. This is going to give you misinformation. It's a green candle. It's up higher. Well, you got to remember to add in all the volume that came in up here. It's just the fact that the candle did not close below where it opened. Now, if I go to a 1 minute, I'm curious to know if we see what I'm talking about. Guys, there was such a lesson here to be had. You could just sense and feel what was going on because I should have wrote it down. This is what also gave me the conviction to take the short here, because I knew that from what I was watching and reading from the price action, right? So what happens? We do make this top, and then what happens? Bang, you completely take that candle right back. What did we do here? Just about the same thing. It took it just about right back, right? So there you're seeing the confluence in buying and selling. The buyers are not in control. The sellers are starting to get in control. If you could have seen this real time and been in this trade, it would have helped you not only take the trade, but really have conviction that this was going to happen. So again, real quick, I said, guys, do not, you're more than likely going to get a double top here, because what you had here also was you started to have this 9 EMA was actually pointing down. It was like right here, right? And what happens is when you get a green candle like we have right there, and I'm going to show you, it pulls the 9 EMA up. So it did not look like this during the day while we were trading it, right? It didn't look like this. I'm talking about this candle right there, this one right here. You see how this yellow line is anchored and trying to come down, right? It's trying to come down because the pressure is to the downside. Well, what happened was it put in its double top, like I said. It put in the double top like I figured it would. So what happens is I explained the 9 EMA because you guys need to know that at that area, at literally on it, at it, and around it is where orders are going to be sitting. This moving averages are a place where institutional ownership puts their positions on. They use that as a place to put a buy order or a sell order. So if the stock runs into it, right, they're buying it or they're shorting it. It's done automatically, right? Buy at the 9 EMA. What happens is you had this rip, and it was a low volume rip because the majority of that candle there with that volume, it's more selling than anything else. And we started sensing there was blood in the water already. This was a huge trade, guys. We gave out the targets. My second entry, and I told members, we get back down here, I'm going to short again in this area. This is a perfect double top, break the level. And what did you do? Look at that. You literally went right to that area. And I said this beforehand. I said, I'm going to take this trade again. I'm going to take it again. Because it should give us the entry. I know the stock is still weak. There's blood in the waters. There's blood in the waters. This is why it's important to read time and sales and really understand what these candles and the volume, like what that price is doing in those zones, because you'll sense these things. So, and I'm sorry again, this live stream is not as good as I wanted it to. I wanted the whatchamacallit to live up to the hope, or the thumbnail to live up to the hype. But I'm going to help you guys save money, because there's something that we're doing wrong here, and I'm going to help you. I'm going to help put in a picture for you guys to really start to like think about things, because it's important. I had to use the restroom, but right here, look at this. The price bounced back, and you know, you had your little wick. Guess what? They were short. Look at the volume. Look how weak. Look how weak that volume is. I can tell you right now, the majority of that candle is buying. They're just lucky it didn't close red, because it would have been another red candle and probably higher. I don't know. But anyway, bounce back. I missed it. I had to use the restroom. Guys, look at that. 2 triple-digit gains today you could have had. You could have had these, guys. I gave you well enough time. I talked you through the trade, right? One of my targets is here. My final target is going to be down this area, right? I would expect more downside if this 10-year yield continues to climb. So I want you guys to know something, right? I want you guys to start looking at like the S&Ps and like thinking about when institutional buyers are going to be stepping in the markets, and why would they step in the markets, right? Why would they step in the markets, right? There's a reason why they say buy low, sell high. It sounds easy. It can be easy if you start learning just simple things like this, right? Let me get this in here real quick. So whenever there's a chart that I did not email to myself yet, maybe I did, I can't remember. The S&P's trading over a 20 times forward earnings, right, is not enticing to investors. Why is that? Because anytime you need to look at the time frame you're talking about. Because if somebody is wanting to buy the S&P, they're wanting to buy something from an institutional standpoint, they're going to want to look at the return 5 years from now, or 3 years from now, hell, maybe even 10 years. So, I didn't even write this down, but I know it. All right. Just so you know, when the S&P has traded over a 20 times forward earnings, you have had a negative 5-year it's just getting late, I'm sorry. A negative return. You have not had a profitable return if you were to buy the S&P 500 over 20 times forward earnings. In the 5-year time span, it has always came in, well, at least in 1999, in the 90s, 95, 94, 95. That 5-year horizon, you netted a negative return, right? There's a few reasons for that. Things are way extended. They start rate hikes, right? They do this. GDP, they went from easing to this. And then it takes that 2-3 year lag. Bang, you're in your 5-year period. You know, it's just institutional ownership wants to take advantage of low multiple names in environments like this, right? There's a reason why they're trading treasury bonds right now. They're getting a 5.5% yield, right? It's just about as risk-free as you can. You're doing that along with some equities, you might be okay, depending on the low multiple names that you buy. You buy, I don't know what the earnings are right now after this pullback, but I'd have to say we're around 19, 18 times earnings probably, if not a little less, maybe. So I really just wanted to come on here and stress, like, because there's nobody really on. If you guys have any comments, please, if you could, comment down below any questions or anything. Even after the stream, I come back, I read them, and I will get back to you guys. If you guys are struggling, what is it that you're struggling with, right? Because you guys don't have to struggle. You guys don't have to struggle. Right? Right now, understand that the 10-year Treasury is at June of 2008 levels. It's maxed. It's recessionary, right? What happened in 08? We're not going to say it's going to happen now, but when you have Treasury yields this high, it's going to put a damper on especially technology names, right? It's going to put a damper on the market. And you start getting into a bear market, everything's getting sold. Energy, gold, technology, healthcare, banks, all gone. They're going to sell it, right? Everything gets hit in the bear market. So right now, we are trading at the same level as we were in June of 2008 on the 10-year, right? This is one reason why we wanted to take Tesla for a trade, not just because the 10-year is ripping and roaring, but because it's already been weak. We have the 10-year. We had the level that we wanted to get short at. We had confirmation at that area that there was blood in the water, and we took it. The S&P, same thing, right? This is our range. This turquoise box is the range I expect us to be in. I will look to buy the dip here, right? This will be a day trade. This will be, I don't know if I'm going to add any to my, I don't know if I'm going to add any right here because I want to see if we can get it lower. But if my goal is really the 430 area, right? That is one of my goals. Let's talk about China real quick because China is now hiding data. They said they're not going to report or give out the information for some of the data that just came in. What? Didn't I just come on here last night and 2 nights ago and talk about how China's uninvestable and this is why they're having their problems? And now we just get news that they're not going to release the data anymore? What? Really? Like, tell me things are bad and things aren't good without telling me things aren't good. You do that kind of stuff when data's good. Like, you obviously, like, tell the world that you have a problem, right? You saying you're not going to show the data anymore speaks volumes. I think you did more than you probably had to do. Just let it, so what? You're having problems. Who cares? Get it fixed. Like, what is it? Like, what, do you think you're weak? No, it's not even like we know you're weak. What? The corruption and the stupid shit that goes on, look where that got Russia. Right? Look what's going on with Russia. They can't even beat a country that's half the size of them. Quarter of the size. Or take over. Like, it's just, you got the people getting upset. The people live in a dirt poor, it's sad. Right? There needs to be a change and just start having the world work together. What is the point of communists? Nobody's taking away your religion, right? Look at India, right? Look at all the other Middle East countries that are actually taking advantage because it gives people jobs, right? It gives people careers. Like, it helps make this world go around. But yet here we are saying we're not going to have the data anymore. We're not going to let you audit our filings when we report earnings. Okay, that's fine. Guess what? You ain't getting the money, right? Who's going to want to invest in you because of what happened? Like, you've already proved with Luckin Coffee that you're not trusted with their financials, right? So, unless you guys have any questions, I really it's late. I did not intend on being here this late. I'm really sorry for the stream tonight. If you guys have any questions, stocks or anything, Microsoft's, putting a double top. It's trying to go down. This red line is where I was actually looking to get short. I said yesterday as well, Kava if if the market is weak, I expect Kava to pull back. What did Kava do? I literally said that verbatim yesterday. I said Kava's up or downside is going to depend on the market and the FOMC minutes. It's going to depend on what the market does. It sold off in the morning, yes, but the market wasn't going anywhere but testing that 50-day moving average and falling back out of the sky. We already knew that. So this was just a sell the news, right? What are we going to want to look for, right? We can go through some charts. We go through charts in the morning. So Snow's already fell out of bed. I really don't have anything, and I apologize. If you guys have any tickers you guys want to go over, you guys can throw them in the chat, or any questions you guys want. Looks like Shopify is trying to like either turn itself around or something. How can we help you grow your account, right? That was the one thing I wanted to stress upon, because if a lot of people, because I got asked a question today too from a couple people, it wasn't just one person. What do I think of, what happens tomorrow, right? Should they grab puts? And I'm going to be like, I'm not telling you what to do, but if it's me, the move has happened. Wait until tomorrow. I don't care if this thing gaps down to 400. We can look back and say, oh, I would have had this, I would have had that. Well, what happens if the market gaps up? Because it could. You're going to get another gap up. You could get a gap up and then it sell off. We get a gap up and then we keep going to then turn it back around. So if I go to the S&Ps real quick, we do have an area that I still think needed to be put, that needed some resistance that it never got, right? Unless it did it that second time. It was the second time that it did it. That's right, it did do it. No, it didn't. Right here, guys. So tomorrow, I will be looking to get short the S&Ps if we find ourselves back up here at 441, 441.50. 441.50 is going to be the range I'm looking for to get short again on the SPY, and then eventually take this thing back down to 438, 436. It's only a couple points, but I'll do my research in the morning. We could look at like solar names. It's starting to try and put in a little bit of a base. There's also guys with whatchamacallit, like Palo Alto, right? PANW, ANW, right? It's been weak. Looks like it's wanting to get another downside here. Looks like it wants to pop back up, but it's having trouble, right? There was news with Microsoft that they wanted to do their own cloud business and stuff like that. So this thing just rejected the 100-day moving average. I will be watching Palo Alto tomorrow. So that's one trade idea for right now that you guys can check out if you guys would like to. Gotta see if you can get this thing back down here. Right, I want to see if this thing can get back down to 199.50 to 200. Right, obviously not in one day. Not in one day, but I think it's got a date with it. So that's about all I have tonight, guys. Like I said, I brought up charts. You guys have to remember that yields are continuing to climb. Okay, the higher they climb, the better opportunity you're going to have to short gold, right? Look at gold. It's coming down, right? This is a daily chart. We probably haven't missed the move yet. I still think it's early. There was a gap here that it's not showing me on here. There is a gap. I'm pretty sure. We have a little head and shoulders here, right? Just from a quick glance. Okay, there is the neckline, right? Oh, no. No. Right, bang. And then let's do this. Come on. Right there. There we go. Right, so I'm going to look for the bounce back on gold to see if I can get a short here. This is gold futures, mind you, so it may look a little different than GLD. but for the most part, they put in the same pattern, right? That's GLD, or this is GLD. Okay. So we have this here. No. All right. So again, there is your neckline right there, guys. Look at that. It's beautiful. That's beautiful. And again, if you guys have any questions, throw it in the comment section. So what we're going to do is I'm going to look for the bounce back. I'm going to look for this bounce back. See if we can ride this thing back down to 168. Right? That's a nice trade. 175. You know, I want to look for the bounce back, though. I want to look for the bounce back. That bounce back, we'll be able to see it, right? We could gauge the 10-year. If the 10-year, right, the 2s, but really the 10s and the 20s, you want to watch all your stuff, right? Look at this RSI. I feel like we can pull it back a little bit tomorrow going into the end of the week. I want to see if we pull this back and try and get ourselves a bounce in the overall markets. I would first like to, get down and test that 438 level, but we'll see, right? So if this thing starts to pull itself back, if it's got a lot of strength right now, maybe this RSI down here puts in a new high. No. I did not want to do that. Right? So if this RSI starts to put in like a lower high, like right here, 72, that would be what I'd be looking for that 10-year to pull back. And then we can take GLD. We can look for that to bounce and then get our short. You can use the 10-year, the dollar, and all these things to help you time your trades as well. You have your areas of support and resistance, and you could use the 10s and the dollar. Like, look, the dollar's at that range, guys, like we said. We want to look for a pullback, right? Where's TLT? TLT's also just made a new low. Wow, I meant to look at it today. This is what happens. I have a chart I can send over. If you don't know this, every bear market, not every, but pretty much every bear market, you will have coming out of the bear market, which will last at least a year and a half, 18 months. Stocks will, make their lows. They will put in the trough, and stocks will start to rally. As stocks start to rally for that 6 months, whatever, 8 months, close to a year, whatever it is, bonds will actually continue to sell off. Right? This is all lining up. If I have the picture, I will send it over. I will put it on tomorrow's live stream, which shows you in accordance to bonds and stocks and what is the cycles through different bear markets. And what it is, the whole point of it is a resetting of valuation, right? Where things make sense to invest. All right? So we're going to be watching the dollar. What you guys also want to do is keep your eyes on healthcare, the Dow names. You want to keep your eyes on, look, healthcare is getting ready. It feels like it's getting ready to pull back and test its 200-day moving average, right? You have healthcare week. It's like you may be really starting to see the front end of this bear market rally, bear market rally. You could start to really see this downside want to play out, but people are still kind of like, oh, it's just a pullback to get long. So you're going to fight some longs along the way. Maybe that in and of itself, people thinking this is just a pullback is more reason for it to sell off a little bit more, right? So there's UNH. Let me use actually TradingView. So what is that? UNH. Hold up. Let me see here. I'm getting a little tired, guys. So HYG. Keep your eyes on HYG. Right? It's rolling back down. So obviously they're rolling down. This thing's got a pretty wicked pattern, guys. If you ask me, that's a one of a kind pattern right there. I feel like I should move my trend lines now. So that's what I had for you guys tonight. Wanted to cover the trades. come join us, right? We trade right here live Monday through Friday, Ivy League Trading, YouTube.com. We come on about 7:30. We're here all day till about 4 o'clock. We go over trades, trade ideas. All I ask is you guys hit the like button. If you haven't done so already, please hit that like. Okay, if you haven't done so already, subscribe. We go through a lot of things, guys. We get through a lot of information. Right, here's one for you. If you don't know this chart, familiarize yourself with it because it's important. You're going to be able, this is going to be able to help you make trades and swing trades. It's painting the picture, right? It's painting the picture. Look at that. That is literally a spitting image. If you were to put this up like next to water, right? This would be a really nice picture. If I could get this picture with like a little bit of water in here, maybe I'll try and make it tomorrow and having it like reflect. Do you guys know what I mean? So again, I'm tired. My eyes are trying to shut. Thank you guys so much. Remember, what is the Fed going to do, guys? We have Jackson Hole is coming, right? The whole of Jackson is coming August 26th. We're right around the corner from Jackson Hole. Does Powell, in his statement that the Fed gives every year at Jackson Hole, right? You're going to have every major important individual in banking and markets there. They're all going to be there, right? They're all going to be there. And every year, again, Powell gives a speech, right? The Economic Policy Symposium, right? August 24th through the 26th. I'm sorry. All right. Tomorrow morning, I will have a list of trades and everything. I'm going to get up early. It's pretty late here where I'm at. So thank you guys for joining us tonight. If you haven't done so already, please like this stream. Give us a like and subscribe. Again, there are 3 major people that I want to bring on here. I can only do that if I have your help. So with me trying to convey and help you guys make trades, or not make trades, but help you guys paint the picture for you guys and what to look for. When things happen, where do you want to be? Right? We should have been in the bond market the past few days. You should have been in banking yesterday. Right? Fitch talking about downgrading the banks. Go to the banks. Right? You don't need Benzinga. You don't need all that crap. If something is going to be a big enough move, it's going to last not 1, not 2, not 3, but for 4 or 5 days, if not a week and a half to 2 weeks. You could look for that up or down move. If there is news of importance, you don't have to be the first to the party. Okay? So, if you want to spend your money on that stuff, that is fine. They will tell you to your blue in the face that you need it. Guess what? I don't have it, and I can trade every day. And been doing it for 10 years. Damn near 10 years. I don't need to know insider buying and selling. Right? All I need to do is wake up, get the news. CNBC gives you the news for free. Right? You can get scanners online for free. You can make your own news thing. You can make your own Squawk Box. Right? All you do is go through the sources to see where everything comes from. There's only so many sources like Reuters and all these other places. Right? You can make your own. And if they try to sell you it, it's going to cost you over $10,000. Well, it's going to cost you over that because they're only providing you with a small piece of what that the company has to offer. Like, let's get that straight first. If you were to actually go buy some of those packages from these companies, right, you're not just getting the one thing. It's actually a multitude of a lot of things. So, and that's all they do. It's not one particular group. It's all of them, right? It's just a way for them to get your money, for them to tell you and you to believe that you need these things. It's a sales pitch, right? That is the psychology of selling. They all do it. All these groups do it. Guys, all you need is a computer, the internet, a phone, whatever. You just need the internet and you need access to the internet and you're good to go. I wake up, I look at CNBC, I look at the top gainers, right? Top losers, upgrades, downgrades. That's all it is. So I'm not going to just keep going with this stuff. Thank you guys for joining me. Let's see how the Fed responds to this, right? Again, I said yesterday, Kashkari warned us that they may talk about more interest rate hikes. The Fed, there's still members that just want to not hike. They actually want to start cutting. and they want to start looking to because they're not stupid, and they really feel and know that there is something coming around the corner, right? And that's fine. It'll help, it may do more good than harm. So anyway, thank you guys. I'm sorry for this kind of stream tonight. I promise to be ready and stuff. I may just start doing a video so I can put the information out there and it's out. All right, guys. So we trade live Monday through Friday, 7:30 to 4. If you guys are on the stream and you guys were here and you liked and subscribe, I just want to tell you I thank you so much. Hope you guys have a great night. I will be right back here early in the morning with my pen, my paper, my charts, and I will be finding out where are we going to get, what are we going to take advantage of today? What is the market offering us? What sectors? Is it banking? Is it technology? Is it the bonds? You got to ask yourself that. Is it the metals? Is it gold? Is it the dollar? Is it the VIX? Okay, is it the S&Ps? Is it the Dow? What is it? Listen, we can teach you these things, and we can also help you lose less when you're wrong and make more when you're right. Not trading your P&L, being in the right positions of the market, like being in the right places, getting your entries right. And the only way you can do that is if you practice. Right? Don't practice and worry about making money. But I'm going to tell you right now, I'm personally, right? Okay, if you have never traded or learned anything and you feel as though you're not willing to just like buy for your long term and put in the work and take the trading slow, right? And take it slow, that you need to get a simulator, fine, okay. I don't believe in simulators. I believe you should come. The way I did it worked for me, so who am I to say anything? It worked. All right. I didn't rush into it. The thing is like even other traders will tell you simulators literally take the 80% of this game away. And as soon as you start trading with real money, you're going to start thinking of being emotional. And I think that's why too many people lose. They have FOMO. They want to just get in. All right. You got to think about what's going to happen if you're wrong. Please keep that in mind. Worry about how much you're going to lose before you worry about how much you could potentially make. You have to worry about how much you lose first. You have to be great at losing and being decent at winning. You got to be great at losing. Thank you guys so much. Keep your head up. If you're working towards a goal, if you're working towards something, and if your things are getting tough and you're about to give up, God bless you. Stay in the game. That I'm telling you, with you feeling that way, you are right there. You are close to getting where you want to be. I promise. That is the feeling of just getting and breaking through, right? You're about to break through. I promise. Don't give up. Keep striving. Keep learning. Let's keep our heads up and let's keep going, gang. Thank you guys so much for joining us. You guys have a great night. I will see you guys early in the morning. 7:30, bright and early, and we'll be ready to take advantage of whatever the market has to offer. You guys have